Alright guys, very warm welcome to another week ahead video. This week's video will cover the trading week running from Monday the 9th to Friday the 13th of August 2021 now, with a very light economic schedule coming up in the week ahead. We're going to turn our attention to the dollar yen, where we do see further scope for upside for the currency pair. Now, last week was a very interesting one for dollar yen, because as we started out the week, we saw some scope for possible asymmetry in dollar yen to the upside, with the downside that we've seen in something like US 10-year yields over the last couple of weeks failing to really push the dollar yen significantly lower. And as a result of that, we thought that even if we did see some additional downside in yields, the move would be more contained in something like dollar yen. Now, that assumption was wrong at the start of the week, because dollar yen flushed to the downside after both the dollar and US yields moved lower after a pretty bad miss in that ISM manufacturing PMI. And we also had a very punchy miss in that ADP, putting a little bit of a bad light on NFP. Now, we did take a very interesting turn of events after ADP, which provided a bit of a perfect storm to the upside for dollar yen, because first up we had that ISM services PMI, which not only beat the market's maximum expectations but also printed yet another record high. But the biggest driver for upside in the pair, as well as the dollar, as well as US yields, came from very interesting comments from Vice Fed Chair Clarida regarding interest rates as well as inflation. Now, until last week, Vice Fed Chair Clarida's policy stance was very much in line with that of Fed Chair Powell, especially regarding interest rates as well as inflation. But his comments saw a shift to a more neutral policy stance, which was interesting, by saying that firstly, he expects conditions for raising interest rates to now be met by the end of 2022, meaning that he's now, inside that chunk of FOMC members that changed their expectations back in June, with that median Fed dot plot now pointing to a first possible hike by early 2023. That was interesting. And furthermore, what he said about inflation was even more interesting, that he said that he expects core inflation to come down from where we are right now, but to reach close to 3% by year end. And if that should happen, he would consider that to be much more than a moderate overshoot of the Fed's inflation goals. Now, that is starting to point to some pretty significant members, thought leaders among the FOMC, which is starting to get a little bit more nervous about rising price pressures. Now, on the back of these comments, we jumped back into dollar yen longs from around about that 109.20 area, because we thought that these comments were just going to be a perfect environment to expect further upside for the pair, because these types of comments would be expected to see upside in the dollar, upside in US 10-year yields, and obviously pushing dollar yen higher in line with that medium-term fundamental outlook. Now, the other big driver, of course, on Friday was that solid NFP print that really delivered the final blow for the yen versus the dollar, as that beat basically moved the likelihood of substantial further progress in the labor market to move a lot closer. And that saw dollar yen break not only back above that 110 psychological level, but also back above a very key trend resistance in the medium term. So we've had some very interesting price action for the dollar yen, and with a very quiet economic schedule in the week ahead, our trading plan for dollar yen is going to be fairly simple, guys. Even though inflation is of course important, and remember we've got that CPI data coming up on Wednesday, even though it's going to be important, the market attention right now is firmly fixed on the labor market in the US, and that could probably see a little bit more of a muted reaction coming out from that CPI data this week. So even though it will be a main event, and probably the main event for the week ahead, we don't really foresee any major risks to the bullish outlook for dollar yen on the back of that CPI print. Now, in the case of a beat, that should obviously move in favor of dollar yen, because that should further support the US dollar, it should further support US yields, especially after more Fed officials, especially like Clarida, has voiced their concerns for rising price pressures. And in the case of a miss, it could of course see some short-term downside for the dollar as well as yields as well as dollar yen. But with the market being more concerned about the labor market right now, a miss could just be more short-term pressure on the pair instead of a monster move to the downside. We would only consider a chunky move lower in dollar yen if we had a monster of a miss coming out with that CPI print. But right now, that is looking unlikely. So we would like to look for opportunities to scale back into and add back to those existing dollar yen longs in the week ahead. And that means that either waiting for a solid beat in CPI data to add back, or potentially just adding back in line with that medium-term upside bias from key retest of that 110 psychological level, potentially also retesting the back end of that medium-term trend prior resistance now turns support. That can also be interesting opportunities to look for some upside. And if in the event that we see yields and the dollar pushing even lower, we would still consider medium-term buying interest to step back in from that 109.50 as well as the 109. But given the turn of events last week, we doubt whether we'll see these two levels playing out. So turning to a possible trade plan then, it's going to be very simple like we said. If we see a beat close to or above the market's maximum expectation for CPI, we would expect that to see upside for yields, upside for the dollar, perfect environment for upside in dollar yen. If we see further hawkish comments from more neutral or dovish policy members, that would also be very positive for the dollar yen. And if we see a more stable risk sentiment environment, which doesn't really see a lot of downside playing out for US yields, that would also be more supportive for the pair. Now, from a dovish outlook point of view, if we see a miss close to or below the market's minimum expectation, like we said, we would expect to see some short-term downside playing out for something like dollar yen. But if we do reach any one of these key support levels, we would still expect that to see medium-term buying interest. Obviously, if it's a miss that sees inflation coming in from the current, above 5%, for headline or above 4% for core, if we see that coming in with like a 1 and a 2 print in front of it, obviously then we're going to see USD yen, breaking back below 109 probably. But barring that type of miss, we would expect any type of retest to be met with buying interest. If we do see, however, some strong pushback against those comments that we've had from Fed's Waller as well as Fed's Clarida, that could possibly see some unwind in that upside, and that is something that we are careful of, obviously, in the week ahead. If we see some of them pushing back against those comments after seeing the market's reactions, that would obviously take some of the, some of that impetus out of the move. And similarly, I think the biggest risk apart from that in the week ahead would be any major risk off tones in the market. Remember that even if we see a risk off tone, we would expect to, of course, to see upside in both the dollar and the yen from a safe haven point of view. But if it's really major risk off moves and that starts to see some demand coming back for bonds, pushing yields lower, we would expect in that environment to get to see the yen getting the upper hand above something like the US dollar, and that could see some downside playing out for dollar yen in the event of a major risk off move. So I think that's going to be the biggest risk factor to watch for. But all in all, the medium-term outlook remains bullish after last week's comments, Fed rhetoric, and NFP. The bias in the short term should also remain more favorable for dollar yen to the upside. Now, remember, guys, when you look at these potential outcomes, these potential market opportunities, they're merely a guide for what we would expect in the event of these various events playing out. So, it's never intended as trade calls, but rather intended as a framework that you can use in your own scenario planning for the week ahead. All right, guys, so that's everything from our side. Hope you guys will have a fantastic week. Like we said, it's going to be a quiet one. CPI is going to be the main event, so watch out for risk sentiment. It's going to be a key driver, not only for dollar yen, but for risk assets in general. And as always, any questions, please don't hesitate to let us know.